Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi, this is Shiraz Mian with this week's top stock video. Joining me today will be Brian Hayes. The stock I've picked to feature here is Prologis, ticker PLD, an industrial REIT, about 95 billion market cap at present, having lost about a quarter of its value from its 52-week high in late April. The company is a leader in distribution and fulfillment, which is a very important, in fact, mission-critical piece in the digital economy, in e-commerce, in digital sales. Prologis is a leader in that space. And I like Prologis for three main reasons, which I will discuss in a minute. But before that, I want to point out the reason why the stock is down. As I mentioned, about 26% from its late April high. Amazon told the market about overcapacity in its own fulfillment assets. We all knew that the growth the industry enjoyed during COVID was unprecedented and was not normal, and will need to adjust for and account for. And the overcapacity reference from Amazon, which later on got confirmed by a number of other industry players as well, is the primary reason why the market pushed Prologis really, really down. About 26% since that time. And I'm not making light of that point. It's a big issue. It will weigh on near-term growth, perhaps over the next 4 to 6 quarters. And if you are one of those tactical investors, perhaps Prologis isn't for you. It's an idea for long-term investors. It is an idea for those who see the long-term value of e-commerce growth. This wasn't just a COVID growth spurt, which goes down over time or just stabilizes over time. There's no question that the future belongs with digital sales, digital economy, and e-commerce, and distribution and fulfillment will always remain a key part of that economy. So if you are a long-term investor, I would encourage you to look at Prologis as a play on that favorable outlook, long-term outlook for the digital economy. Obviously, you could play that through players like Amazon, through Shopify or others. Prologis is better than those picks because it is not a bet on one individual players. It's a bet on the industry as a whole. So let me give you the three reasons. Number one, it's a leader in the space. It is very advantageously placed in all the key markets domestically with an impressive and an attractive growth trajectory globally for the e-commerce space. So as the growth trajectory picks up after the next 4 to 6 quarters, as I mentioned earlier, you will benefit having been in Prologis. Valuation-wise, the stock is attractive. It has lost about a third of its value on all conventional REIT-centric valuation metrics since where it was trading. I'm talking EV/EBITDA, price to cash flows. And then third, it has a fortress balance sheet, generates a ton of cash, and pays a growing dividend. So the dividend currently yields about 2.5%, and it has a history of growing it. Last year was very impressive, about 25%. But if you look the last 5 years, the growth rate averaged north of 11%. So even if it comes down a bit over the next 4 to 6 quarters while the stock and the business consolidates, you know it'll grow, you know it is safe. So as you wait for the eventual recovery in the space, you will be enjoying that dividend. It is a blue chip REIT, has a low beta, so it gives your portfolio that diversification benefit uh, that you desperately need in these uncertain times, with the market concerned with Fed tightening and the resulting heightened risk of problems for the economy. So a leader in the space, in the distribution fulfillment space, uh, stable growing dividend, diversification benefits, and long-term leverage to the digital economy. With that, I'll pass it on to Brian Hayes.
Thank you, Shiraz. My top stock pick this week also pays a healthy dividend, but operates out of the insurance space. The company I'm referring to is Unum Group, ticker symbol UNM. Unum Group provides financial protection benefits primarily in the United States, the United Kingdom, and Poland. UNM offers group long-term and short-term disability, group life, and accidental death and dismemberment products. The company also provides cancer and critical illness, dental and vision, group pension, as well as voluntary life insurance products. Unum Group is ranked as the leading disability income writer and the second largest writer of voluntary business in the United States. The company sells its products through field sales personnel, independent brokers, consultants, and independent contractor agencies. They were founded in 1848 and are headquartered in Chattanooga, Tennessee. That's a bit about the company's background and services. Let's shift gears and look at UNM's sector and industry group. Taking somewhat of a top-down approach here, UNM is part of the Zacks finance sector, which is ranked number 3 out of 16 sectors. This sector has not only outperformed the S&P this year, but is undervalued, as we can see below, based on the forward PE and PEG ratios. Digging a bit deeper, UNM is part of the Zacks insurance, accident, and health industry, which is currently ranked in the top 7% out of approximately 250 industries. Because it is ranked in the top half of all Zacks ranked industries, we expect this group to outperform over the next 3 to 6 months. This industry has performed very well, with a nearly 5.7% positive return year to date versus a loss of over 14% for the S&P 500. Quantitative research studies suggest about half of a stock's future price appreciation is due to its industry grouping. In fact, the top half of Zacks ranked industries outperforms the bottom half by a factor of more than 2 to 1. By targeting stocks contained within leading industry groups, we can dramatically improve our odds of success. Also note the favorable valuation characteristics for this group below. And moving on to our snapshot page, Unum Group is a Zacks rank number 1 strong buy, and the company is ranked favorably by our Zacks style score categories with the highest possible rating for our value style score and an overall B VGM score. Earlier this month, the company reported second quarter earnings of $1.91 per share, which was a 55.28% surprise over the $1.23 consensus estimate. UNM has delivered a 30.13% average earnings surprise over the last 4 quarters. So they've been consistently beating earnings, and the stock price is reflecting this. And look how well this stock has weathered the bear market this year. The stock is up more than 60% on the year and recently broke out to 52-week highs. Only stocks that are in very powerful uptrends are able to make this type of price move, while the major indices are in a deep correction. And despite the recent strength, the stock is still relatively undervalued, as we can see here, irrespective of the valuation metric used. Analysts covering the company are in agreement in terms of revisions and have been raising estimates across the board. The full year EPS estimate has been increased by 18.47% in the past 60 days. The 2022 Zacks consensus EPS estimate now stands at $6.03 a share, reflecting potential growth of 38.62% relative to last year. It's exactly the type of trend we're looking for when narrowing down our list of potential stocks. So it's obvious the growth is there for UNM and looks set to continue. So Unum Group, ticker symbol UNM, is my top stock pick of the week. Make sure you subscribe to get all of our top stock picks. We bring them to you here each and every week on Zacks.com. From Shiraz and I and everyone here at Zacks, thank you for watching. Tune in next week for more of our top stock picks.